Hi, I'm Bert Nussbaumer from macrobeat.co.uk. It's an interesting week, to say the least. We had the sort of COVID-infused wobble. We had the geopolitical infused wobble. Last night, obviously, we had the tax hike infused wobble. And we also had one central bank that sort of broke with tradition, Bank of Canada, that sort of started the taper, and the meeting as such was quite more on the hawkish side. So very interesting to see the first central bank is sort of deviating from the general mantra or the dovish mantra out there. On the geopolitical front, at least with the sort of post-Putin speech on Wednesday and the troop withdrawal from the last few days, the Ukraine situation is de-escalating, so something less for the equity market or FX risk to worry about. Obviously, it's not solved, but at least, it looks quite a little bit more upbeat. The other side, COVID has sort of popped on the radar again, obviously with the sharp increase in numbers in India and some of the other countries, Indian variants and all these kind of things. So it's a stark reminder that all is not yet really sorted out. In terms of central banks, we had, as I said, Bank of Canada, which we look at in a minute. We had the ECB yesterday, very sort of balanced meeting, which is actually a surprise. She doesn't usually manage to do that, but yesterday was definitely a more balanced statement. What was interesting for me to stand out was the comment about the ECB not being in tandem with the Fed. So she already sort of throws that anchor very early that, the Fed and the ECB on a different sort of route, which may as well indicate that maybe they start to feel that the Fed may eventually shift policy earlier than the market currently expects. All this being said, as I said last night, the tax bombshell in the US, it's early doors, obviously a lot of negotiations to come, maybe some changes to come, but that is definitely something for the market to think about in the next few days and next few weeks. The charts I have for you today, first one up is euro-dollar. We continued the recovery. We had some stronger PMI data this morning. The reflation trade obviously still sort of keeps the dollar on the soft side. We just focus on this 121.20 level. That's trend line from the year's high. A break there would obviously continue to push the euro higher. And as long as the Fed stays silent, that might still be the short-term risk. On the next slide, this is dollar CAD, the weekly chart. We just see the sort of levels we are down here with the more hawkish Bank of Canada, and actually the only hawkish central bank out there. There's definitely room on the downside for dollar CAD to maybe reach 120 in the sort of next leg of this move in the next few weeks. The next chart is Aussie CAD. The reason I put that one up, I think this might be the easiest Canada long to have, which is probably the one where we're just going to have some stale shorts here, because here we really trade Bank of Canada versus the RBA. Aussie CAD, you're dollar neutral and you sort of risk on, risk off neutral. So this is a pair that just could sort of grind lower in the weeks and months ahead. Wouldn't be surprised to get back into the sort of low 90s, even below 90 in the next few weeks and months. The next chart, we have Bitcoin. Obviously, there's been rumbles going on last week when we heard about the fact that Mrs. Yellen is going to be part of any sort of regulation on the crypto side. That already sort of led to the first leg down. The tax story yesterday obviously adds fuel to that sort of worries about increase in capital gain tax. There were some silly rumors that Mrs. Yellen they sort of mentioned an 80% capital gain tax on crypto earnings. I think that's probably just that, a rumor. I haven't seen any confirmation of that, so treat with care. But clearly, where there is smoke, there is a fire, and we had a very substantial move lower in Bitcoin now. A daily close below that 50,400 would really open the door for a move as low as 42,000. So that market is really getting shredded as we speak. The last chart I have, the Dow, obviously these sort of two red candles there this week don't really look that impressive, given we had this sort of big move up this year, or more or less since March 2020. Those red candles are all the sort of tuned to 400 points drop, so it's definitely something to look out for. I would say the mid-daily Bollinger Band around 33,500 is really the level to watch on the Dow. As long as we're above there, we could just range around at the higher or elevated levels. A break of that sort of area would actually, for the first time, mean we do something fresh. So the market will probably have to react if that happens. Thank you very much indeed. Bye-bye.